The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we kicked off the week on Monday with a lot of green on the screen in grains and oilseeds, led by that soy complex. Good strength of beans and bean meal leading the charge, double-digit gains in corn and wheat as well. What drove some of that good money flow on the day Monday? We're going to talk about all that and more. Joining us for market analysis, John Heimberg with Total Farm Marketing. John, good to catch up with you again. Hope you had a great weekend. And a nice way to start off the week with a ton of money flow into the grains and oilseeds on Monday, John.
Yeah, and we saw just good money flow into the commodity sector in general today. And maybe this is a little bit of continued trend from the money policy changing with the Fed and the rate cut last week. It just makes things a little bit more money friendly for the commodity sector. There's a lot of money sitting on the sidelines. They may be wanting to step into this market here. You've had the funds sitting short for a long, long time period. So maybe this type of a move wants to move some more money out of those short positions. So we'll see how long this really has some legs, or is today just the Monday pop and then we reverse this back tomorrow? There's a lot of moving pieces out here, but it will at least an opportunity today for some producers. If you're behind on some sales, especially in that soybean market, maybe get some sales done here on beans that you need to get moved here this fall, because given the supplies are still out there, the price has still got some question marks longer term.
I was going to say, it feels like even with the pop on Monday that the corn market's maybe still a little range bound, whereas soybeans really feels like producers are getting a bit of an opportunity here to, your point, maybe catch up on some marketing if they're behind in the soy complex.
Yeah, first off on that corn side, you're correct on range bound, as well as we have a longer term trend line that's working over top. This goes all the way back to May of 23. We failed at this multiple times in July and September, and here again now, and we'll see if we can get through it. Big move there. We need to get through about that 4/16/18 window. Kind of take out this most recent batch of highs, and then I think maybe some more money can come into that corn market. On the soybean side, we've been consolidating realistically since the end of August here, and breaking out of that today. Now, cautious on consolidation and breakout. Sometimes they give you the head fake, and one of the best way to go out of consolidation is quickly to the upside. Bulls dive in, and then they turn the thing right back over again. There are a couple things that we're kind of watching out there that we'll have to keep an eye on. Does that Brazil rain kick in at the end of the week, into next week, like they're forecasting, will be a big factor. There's still a wild card out there that's got me a little bit anxious, and that's these tariffs that we're putting on these Chinese products, as well as those electric vehicles at the end of the week. Do we see some retaliation? It makes me a little nervous, the amount of beans that China's been picking up here in the last handful of weeks, to say, hey, all right, now we're going to put something on the U.S., but they've already got their bean supplies purchased that they need. But boy, that would send shockwaves through a soybean market if something were to happen on a trade war type basis. Yeah,
a lot of concerns out there about potential tariffs and more here, and just that's a sticky situation, I think, in its own right. The wheat markets too. Let's talk about that. Felt like some maybe weather concerns playing in there and in corn and soybeans, but I'm thinking South America. I've heard some talk of Argentine farmers abandoning wheat crops. We have dryness in the Black Sea. Caught some good rains in the U.S. HRW areas over the weekend. There's some talk about a port strike in Vancouver. There feels like there's a lot of different things swirling around the wheat markets globally as well here, John.
Yeah, the headwinds are, the potential for things that could are still out there. Obviously the global weather situation is still fairly big in that regard, and that could still give this market some support. The biggest thing I still keep thinking about is U.S. wheat and where can we sell it. Last week's export sales, when prices rallied, past that $6 barrier, fell off the table. We had a very disappointing week of sales. Now, shipments were good this week. We'll see how sales go. Looking at that chart, I'm looking at Chicago March, Chicago December. We're building a little bit of a head and shoulders pattern here. If we can't get through today's highs, that could signify a pretty good turn in the market technically. So we'll have to kind of watch that in that regard. And that might be, again, just due to the pure fact that we need to move U.S. wheat Global prices are still cheaper. Russia continues to put cheaper wheat on the marketplace in order to fund the war that they're in the middle of with Ukraine. That just keeps a limit on prices. It would be nice to see some more movement there. I think that's going to be a big factor where this corn market wants to go. Right now it just feels like maybe the cereal grains have a little bit more momentum to them, where soybeans are going to see these pops and moves, but then some news could really rip that soybean market right back over again, because again, even if supplies are down a little bit according to what the market was thinking, we still are producing more beans than we can use, and that's still going to be a big factor in the longer term in that marketplace.
We know one day doesn't make a trend, but obviously producers, maybe they're busy with harvest right now. Take a look on their phone at the quote screen, see all this green to kick off the week. Maybe they get a little excited thinking that this could be the start of a longer term rally. But as we kind of pump the brakes a little bit here in grains, this might more so be an opportunity to defend and catch up and things like that. Maybe not necessarily getting too bulled up and excited on a one-day move here, John, right?
Yeah, just stay practical, I guess is my advice. I want to see it keep going. I hope it does. And the market's energy has changed a little here. Feels like we're seeing a little more buy the dip versus sell the rip mentality, and the funds are moving out of these shorter positions. Now, I was a little surprised by the action in corn last week on the commitment of traders, with them actually growing that short position again. But it just seems like there's a little bit of energy here at this time frame. Again, if we can get through some of these key areas, it triggers more stops, it triggers more buy orders, and maybe we can get some run out of it. But again, let's look at the big picture on things. Heavy supply. Still a bit of question on the overall demand longer term. To me, those are still going to point as opportunities for producers to A, make some sales, B, secure some really good defense going into next year. I've been liking the March 430 puts and things of that nature for a lot of my clients who are storing bean or corn in the bins. Well, they just got a little bit cheaper again today just to help build that floor. And boy, I'd sure rather be wrong with a put at 430 with a carry in the market in the September contract that came up 40 cents below versus just kind of taking a risk. So those are things I'm still talking about. Just, again, common sense type plays. They're fixed risks. They don't cost much. At least they're explainable. And if we're wrong, you got the bushels. And so protect yourself. Because last year, again, we still did have that heavy supply year. We got after the first of the year, and this thing just kind of rolled over, especially since we knew the South American weather was going to be good enough to produce a decent crop.
Let's talk that livestock trade. Cattle futures found some decent money flow on Monday. That cattle on feed report from Friday, John, man, that thing felt about as neutral as you could get, in my opinion. What's your take on Friday's cattle on feed numbers?
Yeah, they pretty much pegged that one letter for letter, and that's typically not the case, especially when they nail the placements right on the head. So, kind of makes you wonder if somebody didn't know something. Just saying. Anyway, but with that, we did get a little follow through buying today, and again, that's just some of the money flow. The rate cut, free, looser money. Maybe the consumer stays in the game. Those are things that are out there. Still concerns me overall. As the term I've used in some of our team meetings and things is I'm cautiously bearish. The corn market or the cattle market here. In other words, probably got a spot. You need to make sure you get your defense in, but don't tie to a hedge or don't tie to something that's going to, if this market wants to take off, this is a put play situation. And now we got that the basis rotation has occurred. If you look at October cattle, 183.25 today. Cash trade last week in the South, 182, 183. So we've taken that $8 premium of the cash market out. So now it really is actually a pretty good spot if you're trying to put some hedges together. You don't have to deal with that gap. So that's something I think you need to think about here. If we can get through this 83, 84 window in October as well as December, then maybe we got a little bit more room to run here. We're kind of at a crossroads on some of these charts, some key moving averages, some longer term trend lines. But it's a spot, like I said, you slide some cheap defense underneath, at least protect your floor, leave your upside open for the cattle, and then we'll see where we are. Again, overall, the fundamental picture is still friendly. Cattle numbers are tight overall. I'm a little concerned about these carcass weights that we see out there. There's some big animals going into the kill yards. That puts extra beef in the cooler, as well as the softness we've seen in the retail values. If that continues, it'll be interesting to see if that cash price can hold in there, going into the weeks ahead.
How about that hog market too? I know we got a hogs and pigs report coming up later this week. A little bit of green there on the day. Monday, I felt like it kind of followed cattle along to the upside. What's your take of the hog market right now, John?
Yeah, we kind of did a little bit, at least in some of the back months. October compared to where it is with the index and retail values is probably kind of getting to a toppy point. Plus, we don't have a lot of time left in October, less than a month in terms of expiration. Felt like there was a pretty big gap, though, between October and December, and that spread kind of played out today where December gained the strength, lifting those back months up. So that's something we'll need to kind of keep an eye on going forward. But at least the charts look a little friendly right now, that maybe this hog contract's got a little bit of value to be added to it. Plus, on top of it, if the consumer does start really feeling some pinches here, when you start going to the store and you still look at the price of beef and the pork in the cooler, it's a big difference in that regard, and that can still keep some good support here, especially if that consumer still wants to turn away from that higher priced beef.
John, good thoughts as always. Anything final you want to share or reiterate with producers here today?
I kind of mentioned it in the front end. I know it's busy time, you're rolling, you're in the fields, but keep an eye on that market. Take advantage of opportunities, especially if you got bushels that need to find a home. Still, it's going to be difficult, I think, to really make storage work this year if things stay the way they are. And if you do have storage, have a floor underneath that market, so that way you're not taking on those risks of storage and lose the price value at the same time. But stay active. Feel free to reach out, talk to people. And just kind of stay in tune with what's going on in the markets, because days like today, things can move very, very quickly one way or another.
John, if folks want to reach out to you there at Total Farm Marketing and get some advice and ask questions, how can they get in touch with you?
Just give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And again, that website of ours, totalfarmmarketing.com.
John Heimberg, Total Farm Marketing. Always good to talk with you, sir. Thanks for joining us here on Market Talk.
Sounds good. Have a great week, everyone.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.